I gave you my high probability New York Open entry model, and I gave you the PM session model. But what if you want to trade London session? In this video, I'm going to share my 2 London session bread and butter setups that you can use trading NASDAQ, trading futures, and you can even translate it to the Forex pairs. We are in layer 14 of the technicals part of the trading pyramid. No time to waste. Let's go. There's 2 different models you need to understand trading London session. But before we go into those models, keep in mind if you trade futures, let's say NASDAQ on London session, it moves like the PM session. It means not every day and in smaller ranges. And the one question that decides if you can trade London session and which model, did Asia expand or consolidate? What did the Asian session do? Model 1 is Asian expansion, what you can use if Asian session already expanded, or when Asia consolidates, the classic Judas swing. But more on these models in a second. And an important rule when not to trade London is when there's a huge prior range. If Asia already moved hundreds of points, or if the previous day was like a massive move, London is not the highest probability. Or when there is big New York red folders coming up like NFP, CPI, or FOMC. And the London session is a kill zone. That means a certain time of day where the highest probability entries will come. Your highest probability entry models will be between 2 and 3 a.m. EST, where most USD pairs, so the Forex pairs, but also NASDAQ, ES, and YM, and gold start moving. What you will see if you're going to build data on the US indices is that where most entries come between 2 and 3, there will also be many entries around 4 a.m., 4:30 a.m. EST. So when there's no entry after 3, keep in mind that the entry can come a little later. And you can not only trade NASDAQ, ES, and YM during London session, you can also trade the dollar pairs on futures. So the Euro and GBP crosses move the best in London session. If you then go to a live chart, you see that there's different boxes here. There's an indicator, ICT, Killzone, and pivots. It is this one. If you edit and then go to the settings, you can just copy the settings I'm using right here. You can pause the video and copy the settings. Our focus is going to be on the London session between 2 and 5 a.m. The pink-ish box. And this is on NASDAQ. If you want to see the other futures pairs, you can press the plus icon here, and then you see all stocks, funds, and also futures. And there you can see everything you can trade with futures. You see ES, we see gold, the Hang Seng, silver, gold. But I want your eyes also to go to not only the indices, like the Nikkei indice, but you can trade the Canadian dollar futures. That means USD CAD, USD GHF, NCD USD, Euro USD. If you want these blue boxes removed, you can go to settings, go to symbol, electronic trading hours background, and then move this to 0%. But let's focus for now on NASDAQ. If you look at the pink boxes, you'll see that not every day is a trade day. Small range, just like the PM session, that you can trade London session does not mean there's a setup happening every single day. There is where the entry model comes in. I'm about to show you next. You see, recently there's not many entry models. There's entry model right here where we sweep Asia. No entry model here. There's entry model here, not here. There is here, not here. And you see that if you zoom out, there will be entry models, but not 100% of the days. So there's where we need filters, entry models, to filter is London session nice to trade on this certain trade day. Let's go over the first entry model. The first model is the Asian expansion, and it activates when the Asian session already hits the key level. And we need to combine a higher time frame level with a lower time frame structure. So what that means is that Asia already taps a higher time frame array. In this example on the right, there is a very bullish trend. So when Asia trades into a key level during a very bullish trend, we could see a potential Asian expansion. An example, we see that Asia already trades into a key level during Asian session. That's the new week opening gap, the volume imbalance and the gap right here. And what we are looking for is when Asia session trades into that key level, that it already displaces higher. It also leaves a fair value gap, and also it invalidates this bearish fair value gap. So there's where you need to pay attention during the London session for a potential Asia expansion model. And what we are looking for is that London retraces into those fair value gap and then runs to the draw on liquidity. So we have a 1 hour bullish fair value gap here. We assume that Asia already made the low here because we are very bullish and it's already in a new week opening gap. That means we expect London to trade into there before continuing higher. Where to? Low hanging fruit, just an old high right here. And if you then zoom into the lower time frame, that can be the 1 minute, the 5 minutes. If we zoom in on that price action, what you'll see is here's the new day opening gap, the purple box. We have a liquidity sweep, break of structure, leaving a fair value gap. It could be the start of the move. If we mark that out, you see that there's 2 fair value gaps with the displacement move breaking structure. So the entry could be already here. And then we have multiple options. If you look at this price action, this to draw on liquidity, we expect price to go to the 1 hour fair value gap and go higher. You can do two things here. There's an entry nuance. There's no right or wrong. Do what your risk management works best for in your trader personality. You can go for 1 to 3, 1 to 2, or somewhere there in between. The 1 to 3 you can get in this trade idea by entering in the first fair value gap. The 1 to 2 you can get by entering in the second fair value gap. If you are early, you have a higher risk that price maybe goes stop you out before the real move, but you have a higher risk to reward. If you want to be more safer, so lower risk entry, you can wait for the second fair value gap, but you have a lower risk to reward. Again, both is good because if price goes up, you most likely will make money regardless of 1 to 2 or 1 to 3. And then fast forward, price runs to the target with speed. What you saw here is that after the 2 fair value gaps were created, there was like a massive move down. And I'm a big fan of not touching your trade. What that means is you take your entry, you set your stop loss, set your TP with the right risk management, and then you just walk away. And it doesn't mean walking away from your screen, but just don't touch the trade anymore sitting on your hands, because that would have saved you taking your trade off too early before the real move. And you will see if you start doing that, we're going to touch on that more in the psychology part of this mentorship, that your win rate will skyrocket because your discipline will become better by doing this. So both trades went to TP by just following the entry model, where Asia tapped into the higher time frame array. It displaced away, leaving fair value gaps. Then London retraced into that fair value gap, and on the lower time frame we played from this low with the liquidity sweep back to the high, and it even went higher, but that's irrelevant because we made our money already at the TP point. This Asia expansion model is a very strong entry model, but what if Asia doesn't expand? What if Asia just consolidates, just trades around and nothing happens in Asia? How to approach that situation? There's where the Asia consolidation model comes in, and it's also known as the classic Judas swing, where there's an accumulation, manipulation, distribution, the power of 3, where Asia accumulates, London manipulates, and then starts distribution. We are again going to use a higher time frame level with a lower time frame structure. And this happens when Asia never tapped into the higher time frame array. London manipulates into that array first and then reverses through the structure to the draw on liquidity. And we're going to build on top of the expansion example from the PM session model. If you've seen the PM session model in the previous video, you're going to recognize this exact structure. We traded this PM session model. And now we're just going to use the expansion we had the TP on for the next day during London session. Because that PM session model created a overlapping 1 and 4 hour bullish fair value gap. And now we are in the Asian session. You see it accumulates a bit. What we're basically waiting for is we have a fair value gap here. There's also a small fair value gap right here. We just wait for price to or trade into here, goes higher, or trades into here and goes higher. Both is good. We just wait on a lower time frame for the structure. Those are the key levels for the London session right now for the Asia consolidation model. Zooming in on the price action on the lower time frame, we are now in the Asian session and the start of London. Asia accumulates. Then with the start of London session, it starts to manipulate into that overlapping 1 and 4 hour fair value gap. But there's no long ID here yet because we need to see reaction from that displacement. And if you dropped even to the lower time frame here on the 1 minute, there is where it becomes interesting, because in the middle of the London session at 3:15 a.m. EST, it creates a low. The liquidity sweep, market structure shift. There's an order block here. That's the down close candle here that made the low. We move away from that, creating a fair value gap, creating a fair value gap here, multiple fair value gaps. So here is the buy structure we need to start looking at the buy idea. So if you mark that out, liquidity sweep, break of structure, fair value gap 1, fair value gap 2. And again, here there's 2 different entry possibilities. First entry possibility is in the first fair value gap. Second entry possibility is in the second fair value gap. If we then zoom out here, we have the Asia accumulation, then we have the London manipulation lower into the key level, and then we start potentially the distribution move higher. What could be the TP point? Well, obviously the high of this accumulation is going to be the target like this. Then if you zoom in for the entries, just like the previous model, it's up to trade discretion if you want to enter early for a high risk to reward with the risk of being stopped out before the real move, or you want a higher probability entry with a lower risk to reward, then choose the second fair value gap. Both is good. It needs to fit your trader identity, your risk tolerance. And then if you fast forward, price goes to the draw on liquidity with both entries in the first fair value gap and in the second fair value gap. And if we zoom out then on this speed of price action, this was the PM session model from the previous video. And after that, we played an accumulation in Asia, a manipulation in London session, and the start of the distribution after we created lower time frame structure. Remember, we combine higher time frame level with lower time frame structure. Well, we are bullish on the higher time frame. That's the context. We have a 1 and 4 hour level, the intermediate term time frame, and then we use the lower time frame to find our entries. The key takeaway for the London model is the time is the most important factor. NASDAQ is around 4 a.m. EST. The USD pair is also in 2 to 3 a.m. Try to use the Euro and the GBP futures as well, because those tend to move during the London session. You can trade them on futures too. How the Asia moves is the deciding factor. Does Asia expand or consolidate? That is what picks your model. It can be Asia expansion, Asia consolidation. Very important. If there's no higher time frame level close to your current price action, there is no trade and you just sit on your hands until the next session comes, and that is the New York Open. And there you have it, layer 14 of the technicals part of the trader pyramid. If you got value from this video, make sure you like, share it with a trading friend, and make sure you're subscribed to not miss out on the other of the 35 episodes here in this futures mentorship. The next video in the mentorship is now appearing on the screen, so make sure you check it out right now. If you want the PDFs and the slides of this video, you can find them in the description and inside my free Discord, together with hours of more free education. Thanks for watching, and I see you in the next one.